Welcome back to Hospitality Investor News Desk, and we are on our last day, and we're going to look at the data. So I'm delighted to be joined by Jesper Palmqvist, Regional Vice President for STR in APAC. Jesper, welcome.
Thank you very much. Great to be here.
Yeah, so you've got all the data and you've got the insights. So tell us, how is APAC performing?
Well, if you compare it with the other big regions, the difficulty I have often with Asia Pacific is calling it out specifically because it's so big and diverse, and we also have way more data this day. So when someone from Wall Street asks me, what's the RevPAR for APAC? It doesn't mean much.
Yeah.
So there is that. But then generally there is a delayed reaction to what you see out west that then happens here. But at a macro level, you know, North America is seeing a little bit almost flattish when like occupancy and ADR is moving a little bit. You've got in Europe, compared to that, South and Eastern Europe are driving rates as a comeback, so that's a difference. Middle East is performing a little bit better now, about 3-4 points up in each. And here we're seeing rates still positive year to date, but that's driven by a number of countries that we can get into. Otherwise, it's demand. It's the demand that is the issue. It's softening on a lot across the entire region.
It is, yeah, and digging deeper, because it is just a massive region. Where are you seeing, however, still strong performance? Let's go into those markets.
Yeah, I think that one of the biggest topics is Japan,
Yeah.
as a hot market. Now that occupancies are up there in plus 80%, that means you get compression, it means you get weekend rates that are really high. And I think in the big four, so if you're Tokyo, Osaka, Kyoto, and also Hokkaido, there's definitely a push for those rates to keep going, but now we're seeing this year that it's slowing down. Once you're that high, it's not going to work that much, but you have to look at the absolute levels, going from 20, 30, 40,000 Japanese yen. Are you at a good level enough for that to work? And I think that's true, and it's one of the few markets where you can say in APAC, globally, they are at good rate levels now.
Yeah.
So I think that's pretty interesting. Now, Korea and Hong Kong arrivals kind of slowed down to Japan recently, but any kind of slump is not visible. It's just going to be a brief reaction. I think Korea is interesting. More people talk about investment in Korea now. We've had tremendous rate growth. Got a lot of domestic brands like Lotte with L7 and international brands coming in. They're driving a lot of growth throughout the region, and it's not just in the big cities, it's across the country. Now, the fundamentals people had challenges with in the past are still there, because how you manufacture with debt or financing the whole situation. Maybe the biggest risk is historic volatility in demand. Everything from Chinese demand or Japanese demand that I think can be still a challenge. Around the region otherwise, people have looked at both India and Indonesia, large markets. Indonesia this year, it's more than Bali. It's driving a lot of rates, but the big challenge this year was the government, after the election, came out and said, we're going to spend less by government in hotels. It's happened in many countries, right? It happened in Japan, happened in China, in the US as well, right?
Indeed.
So we're seeing that if you had a meeting hotel space in a second tier city, you've been softer this year. India is a great market because we're seeing broad growth. It's not inbound, it's all domestic. You want to see regional growth, and it's that maturity in markets that we've been missing. New brands, safe hotels across from economy to luxury. So we're kind of excited to see how India is growing as well.
Yeah, there's so many star powers and countries, and to your point, it is a incredibly diverse and dynamic market. So it's hard to talk about it as just one cohesive location or place. But there's been a lot of chatter over the last couple of years around Vietnam and Cambodia. How are those two markets performing?
Yeah, I mean, Cambodia it's kind of, sometimes I put together with Sri Lanka. Great markets, wonderful people, extremely great hospitality, inherently so. For Cambodia, this is going to take a lot longer time because when you have that shock to the system, if you have an engine like Thailand, it reboots quickly. But in Cambodia, that takes on. They have some new hotels, airlift, they have a great new airport, but I think they were also very dependent on the Chinese outbound.
Yeah.
And when that happens on certain source markets, it's going to take longer. That's a low and slow burner. You're obviously ahead of markets like Laos or Myanmar for other reasons, but it takes a longer time. Vietnam is more interesting, and we've heard throughout this week here at IHIF that is people still want to invest in it. Vietnam has, you have to remember that Ho Chi Minh City and Hanoi are markets that are performing well already. Hanoi has transformed. Like 10 years ago, you used to have like 80% motorcycles. Now it's 80% cars. It's just changed that market. It's the regional areas. People still want to put resorts in, but airlift is critical for that to work, that market.
Indeed.
Sure.
And I thought one of the things that was so interesting about your presentation yesterday was that you talked about the diverse demand drivers into Asia Pac and throughout Asia, but it seemed that a lot of it was intra-regional. That Asia in many markets is depending on Asia and other Asian markets, and it's not dependent on a U.S. or a European travel. But and in many markets, Chinese travelers still hasn't returned. So tell me about that demand. Is it more diverse than what it was previously?
Yeah, it definitely is. If you break it into a few pieces, yes, there was an overdependency for many markets on Chinese travelers, and not just any Chinese travelers, it was the group.
Yeah.
Like everything down to $0 tourism that didn't really help many countries like Bali, Phuket and everything. So now that has changed. So you have more FIT, people are prepared to pay more. So when we say that China, is it back or not? From a receipt perspective, they're kind of back this year, but not from a volume. And that's not necessarily a bad thing, right? So that's a good thing, but that impacts markets depending on what kind of hotel you are and what kind of market you are. So that on China. ASEAN, so the Southeast Asian region, always had this challenge where you have a baseline of people traveling, because those are 2-hour flights generally to get across there, and they're about 150, 200 US dollars. Good, well-priced flights. But seems to be a cap. We're not seeing a tremendous growth in that, unless, which we can catch on later, events drive that more. So the US travelers are always attractive to this region because it's stability.
Yeah.
Strong dollar and stability, because this instability that we see, Japanese currency is low, Japanese stop traveling. Like we see that in Philippines, that reacts. Australians are also stable in terms of they keep going, not just outside Bali and Fiji, but mostly. So the pattern has changed. More inter-regional Indian. Like everyone's been talking for years about the outbound Indian traveler.
Indeed.
It's absolutely increasing into Southeast Asia, into Vietnam for sure.
Yeah, and it's interesting that you note that it's not just a volume play, but as an emerging middle class, perhaps less volume, but spending. Yeah, it's spending more, which is a good thing to your point. The other, shifting gears, the other part of the arithmetic in terms of operating performance is certainly impacted by supply and pipeline. And again, just as you discuss on the demand side, supply is diverse, right? But as we've seen, construction across the world, and certainly in the West, is very expensive. The debt is either unavailable or also extremely pricey. And all of that in the current environment, has really stunted and made it for a very moribund construction and pipeline. But what does the pipeline look like, Jesper, in Asia?
Yeah, so right now you're looking at almost 500,000 rooms. And it's a big number, and that is excluding China.
Yeah.
So because we sometimes we're like, why are we excluding China? Well, China is like a region in itself, and there's so many keys, and it's also the complexity of what will actually open after this slump that we've seen macroeconomically in China. So those 500, that's about 2,500 hotels, but about 40% of them are in India and Vietnam. So when you start breaking that down, it is so spread out. But India, and that's back to that, because India is looking for, the impact there is not so bad because India was missing that regional play. It's undersupply of everything from mid-scale economy and upscale across these brands. And it's easier to open an hotel. It's not easy, but it's easier to get a hotel going there. I'm finding there's a lot of IPOs that have happened, still some to come. And Vietnam, like we mentioned earlier. So a lot of that being driven. You can see oversupply impacting markets quite quickly. Even in a small market like Singapore, when they open 6,000, 7,000, 8,000 keys, it takes a slump on rate. Melbourne, Auckland, and in China, you see it takes a bit of a hit. Where we are right now is, of course, 27, 28. So we have a breather right now, which helps as demand is slumping. We're not seeing that because we opened a lot that was delayed from COVID.
Yeah.
And the same effect globally, right? So right now we're waiting to see, when you look ahead, 28, 27, it's a lot of new rooms. So the majority of them will open, and it's across everything. Yes, in Australia it's more independent properties, but it's resorts, it's urban locations, it's hotels, it's service departments, it's hostels, it's co-living, it is branded resi if you expand it. Interest in this region is massive. And the other key factor is brand.
Yeah.
Like US was only the branded region around the world, and then Middle East. If all this opens in Vietnam, it'll be the most branded country in the world. And it goes from nothing to that, right? It's a huge shift.
Yeah.
And it's exciting to see, I suppose, because if it builds out the services that are needed, so an airlift on roads and trains and everything, it builds the infrastructure of the country. Right?
Yeah, it's incredibly exciting and diverse. And I'm curious, one of the other things that we've seen and we've heard a lot of from over the last 3 days is the types of concepts and platforms that are coming out. You just mentioned quite a few. Obviously, service departments, extended stay. There's been a lot of talk around alternative accommodations. How does STR track those? Are you tracking those in the very same way that you're tracking hotels? And do those models skew the performance in any ways? I mean, we've heard from concepts that are 5-week stays, right? Now they're very few, right? I'm not suggesting that that's the mainstream, but I'm curious: are you seeing many more of those types of hybrid models enter the market? And how does STR track those?
Yeah, and I suppose what from the data set itself, from STR and CoStar, there's a couple of things there. One is that we are saved by the fact that it's still a small part of the normal hotels, if you call them, is still the absolute majority. Now, anyone who talks at this event and others about, we're doing this in the co-living space, we're doing more extended stay, absolutely, that's going to get a lot of profile and a lot of attention, but it is a smaller part of it. Now, if you have a service department, you want to compare your 3-bedroom with another 3-bedroom, right? Yeah. I get that. But when it is a niche play, it's going to be a little bit lower there in terms of the overall data set. So it doesn't really impact. We track it. We have it, these things flagged, and you can pick and choose in the CoStar database which properties you want to compare with of a similar nature, both from a top line and a bottom line perspective. So I think it's managed well that way. But it is interesting how you think about. We've had a lot of conversation about white label and other things here. This is something Asia Pacific didn't have. Yeah. The last 2 years, those models are shifting. What it means ultimately is that owners have more choice. Owners, and we have new owners in this region, more new owners than we've ever seen. They might have owned a real estate company or rail company or making refrigerators, and now they say, hotels look like a great return because I can yield much stronger than my office asset. The data centers and hotels have been, for the last couple of years, an asset class that people got into more in this region, which we obviously track in our CoStar database. Yeah,
and that's a great point, Jesper. Is we ourselves this year have seen an incredible diversity of new capital, and a lot of it being family office, or to your point, investors that have made their money elsewhere and now are looking to allocate it into the hospitality sector. So, are you seeing that from a data play? Are you getting a lot of customers and investors coming to you looking for the data that they need to apply to an investment mandate in a new sector like ours?
Yeah, I mean, personally, I've attended much more broad, different asset classes, real estate things in the last couple of years. It's shifted not just because of what we do as CoStar with the acquisition of Domain in Australia and everywhere. It's just more owners that get into that space forces a different conversation. It speaks to the maturity of owners here. And as you know, the big difference is owner is king, right? Here in this region compared to many other regions, owners' decisions is what matters. And over time, that breeds the maturity on how they manage hotels. Look at a market like Japan, where for many years it was managed one way, like overstaffed. Maybe the same in India and other markets, and now they are getting better, and they're getting outside help as well from foreign companies buying in, if it's Blackstone, GIC, or whatever, pushing the boundaries of how they should asset manage this and push the profits higher. I would argue, though, back to the pipeline point, Tokyo and Osaka, if you put them in isolation, they have much fewer luxury assets than London, New York, Berlin. There is still an opportunity for that, and I think the owners are starting to realize and getting better at which asset class should I get into that, and that's where we can help with that data. And I think it's an interesting conversation because they will be experts in one asset class and then take some time in this. Yeah,
exciting. And so shifting gears back to demand, perhaps, global events have been increasing since post-COVID, right? When here in Hong Kong, you see a number of global events coming back to the market, but it's throughout Asia. As a global events organizer, we're clearly seeing that and taking advantage of that opportunity ourselves. But I'm curious, Jesper, from your perspective and from the STR data, what are the investors looking to in that MICE market? Are they seeing the performance? And how are they modeling that into the opportunities and the investment allocations moving forward?
Yeah, I think in the last maybe in the post-COVID era, events has changed so much. Well, it's nice when we look at Hong Kong, you're running this great event here, and meanwhile there's the jewelry fair that is attracting a lot of attention. It speaks about luxury and high-end luxury, how much money there's around. Look at Singapore in the last couple of years, everything from the big concerts. Concerts and events like that has changed so much, because how do you make money as an artist, as a music artist these days? It's merch and it's gigging, right?
Yeah.
And this hub spoke new reality with all these artists that are doing it. And when we track it, it clearly has an impact. You can see that on tour and what they do, but it is these instances. It creates spikes. So it is a top-up of a baseline, but it matters. And that's why you see Hong Kong now building this great arena. We have a great new venue here, but Bangkok and other markets are trying to compete with Singapore and other markets, getting all these events and artists. It does matter because it's not just PR. That you can manage it, but because of that hub spoke thing that you will have an artist for 5 to 10 nights, the amount of overall GDP and like the impact it has on F&B and retail and hotels and everyone, but people flying in with increased airlift, I think that definitely matters. And I think it brings us down to what the profitability around hotels, because the biggest thing when I mention F&B, for me, top line is easy to say. We have stable growth ahead, low, right, to 1 to 2% in the region. If people can manage that, it's okay. But the F&B challenge right now in hotels. Great conversations this week with your panels around, should I outsource?
Yeah.
Should I keep it in-house?
Yeah, tons of conversations.
Right, and we had a hotel mentioning to me as well, I'm building a new hotel, big hotel, 0 F&B, not even breakfast.
Yeah.
And I'm like, how does that impact your breakfast experience? They're like, no, we're targeting a customer that won't eat breakfast, and there's 100 restaurants outside, because that profit margin that they're seeing under challenge is impacted mostly by F&B. Could be benefits, could be wages, and the cost of running it. So F&B is, I think, the biggest topic towards the end of the year, and how the cost impacts.
And to your point, so many different perspectives on it, right? I mean, some are absolutely, building it directly into their brand,
right?
Whilst others, to your point, are completely removing F&B.
And it can be executed really well, absolutely, as part of the brand and everything. But on some occasions, it probably should be outsourced.
Yeah. Cheers. Keep it classy, Hong Kong.
Thank you.